What's up, guys? It's Dan from Coin Bureau Trading. Today, we're going to take a look at where we are in the crypto market cycle and why it's likely to peak over the summer, specifically in Q3. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So I want to start off, guys, by summarizing a post I did in the research feed for our Coin Bureau Club members, because I think it summarizes the three scenarios, like the three possibilities, quite nicely. And I basically make the case as to why, basically, that we're going to see a cycle top over the summer. This is actually something I've been expecting since about February or March last year, and I'll explain why here in detail. It's actually very simple. So a brief overview of the three possible scenarios for crypto. Scenario one, the top is already in and crypto is entering a new bear market. For this to be true, this time would need to be different, as it would mean a much shorter crypto bull market, or I guess rather a much shorter crypto cycle. And it would also require crypto decoupling from macro conditions to the downside. Global liquidity continues to rise, and crypto closely tracks global liquidity. As such, a new bear market would require a bearish decoupling. So basically, we have global liquidity rising still, and it's going to continue rising over the summer. And if you're saying that now, that we're entering a new bear market, then you would basically need to assume that crypto is now going to decouple from liquidity to the downside and is going to underperform, which does not seem to be very likely. Like that everything else would be rallying, crypto is going down. I don't think that's the case. I think that the chances of that are extremely slim, to say the least. It would require some very serious exogenous shock, let's say. Scenario two, the top is not in, and the most bullish phase of the cycle will occur in Q3 this year. This would be consistent with previous cycles, as the last two tops happened a bit sooner, January 2018 versus November 2021. You'll notice that there's like a 2 or 3 month difference there that kind of like pulled forward. It would also be consistent with retail expectations of a Q4 top, resulting in front running. This is one thing, we'll get back to it in a second, but it's one really important factor, is of course more people now compared to previous cycles. They're aware of the 4-year cycle, and the consensus view is that there's going to be a cycle top in Q4 this year or in Q1 next year. And of course, when you start to see crypto prices rallying over the summer, what do you think people are going to do? Are they going to wait until it rallies more, later this year or next year? No, they're going to start buying now, expecting higher highs later in the year or early next year, and this will kind of basically cause a cycle top over the summer. It's kind of like the psychological aspect. More importantly, it would be consistent with global liquidity, which is projected to peak sometime around Q3. And again, we'll take a closer look at all these different components in just a second. I'm just starting by outlining, I guess you could say, like the overall thesis here. So scenario 3, the top is not in, and the most bullish phase of the cycle will occur in Q4 this year or Q1 2026. This would also be consistent with previous cycles, as is just as possible that we'll see the top happen a bit later versus sooner. So again, I guess in case it wasn't clear enough, we are looking at kind of the crypto market through two lenses. We're looking at the crypto market through the crypto market cycle lens, and then also through the macro lens. So from a purely crypto cycle perspective, it actually is possible that the crypto market could top later this year or early next year, simply because, January 2018 versus November 2021, that's only a sample size of 2, and you can't really conclusively say that the next top is going to be a couple months sooner, right? It could also be a couple of months later. So that is technically possible. However, this would be inconsistent with global liquidity, which could be contracting by Q4. This would require a bullish decoupling, which is possible but unlikely to last. So basically, in contrast to the first scenario, in this case, basically global liquidity would be contracting, and we would need to see crypto continuing to rally against that kind of deteriorating macro backdrop, which again is unlikely. It's possible. It's happened in the past. As a fun fact, when crypto is kind of like at its peak FOMO phase, it will decouple from liquidity to the upside. But to see basically crypto rallying for a sustainable period while liquidity is falling, this is not something that basically it's never happened before. So you wouldn't really, I guess you wouldn't really be very smart if you have that as your base case, in my opinion. Anyways, given the above, I reckon that scenario 1 is the least likely. So basically that the cycle top's already in, that's the least likely scenario. Scenario 2 is the most likely, meaning that we're likely to see a top over the summer. And scenario 3 is possible, of course. It's also quite simple to figure out the validation/invalidation for each scenario. If crypto prices are significantly lower than they are now sometime in Q3, then scenario 1 is correct. So basically, if we're in, I don't know, like July, August, and prices are way lower than they are now, then obviously the top is already in and crypto's entering a new bear market. But if crypto prices are much higher than they are now sometime in Q3, then scenario 2 is correct. Like if Bitcoin is up at around like 120, 130, 140K, a lot of altcoins are rallying, then probably the second scenario was on track. Let's say if we're looking at that sometime in July, August. And then, of course, if crypto prices are basically where they are now sometime in Q3, then scenario 3 is correct. In my opinion, the chances of prices chopping for another 1 to 2 months is extremely low. I know that was the consensus view, I think, as recently as a couple weeks ago, that we would see another like 6 months of grind before a recovery. But the chances of this, I would say at this stage, is quite clearly we're not going to be chopping for another 1 or 2 months. There's either going to be a breakout or a breakdown, and history suggests that it will be a breakout, meaning scenario 2. So now we can take a closer look at each of these components, but first I'll just mention, again, this was a research feed post that I did for our CoinBureau Club members. CoinBureau Club members get access to weekly small cap altcoin reviews. The way that we pick those altcoins is we allow our members to vote on which ones they want us to review. And of course, we have a research feed where I'm sharing these types of insights. We showcase our full crypto portfolios as well as the cryptos we're considering buying. We have an exclusive deals page where you can find discounts on crypto analytics platforms and stuff like that to help you with your research. And we have a members Discord where you can ask us questions or kind of grill us on our views or whatever. But anyways, so now we can kind of, again, like look at things through these two lenses. Again, you'll recall we're looking at basically the crypto cycle, like where we are in the crypto cycle based on two factors: the historical kind of like 4-year cycle, and then also the macro backdrop, the macro cycle, let's say. So as you guys can see here, this is a chart that I've shared many times before. It's one of my favorites. I think it does a really nice job here, basically dividing up the 4-year cycle into accumulation, growth, bubble, and crash phases. So last year, this chart only goes to 2024, and that was the growth phase. And of course, 2025 is historically speaking, that should be the bubble phase where we see basically exponential growth. And of course, we're halfway in through the year. And, depending on your view, if you think the top is coming later this year, early next year, whatever, I would say that the consensus view is that this is a bubble year. The only question is, when will the top of that bubble be, right? Of course, at the start of the year with prices down, everyone thought that it was over. But now I think going into the summer, it's clear that it's not over quite yet. And we could see another massive leg higher. And the only question then is, is it going to be Q3? Is it going to be Q4? Or is it going to be Q1 next year, right? Like that's of course, a very important thing. This is where the total crypto market cap comes in super handy. Again, this is also a chart that I've shared before, and I think it's very important to share here because, as you guys can see, it's like, the idea that we're somewhere near, how do I explain this? The idea that we're basically going to see the cycle top sometime, let's say in early next year, it doesn't seem that likely when you look historically at like this final kind of like bull flag pattern, let's say, that's forming here. You can see we saw the same thing here over the summer of 2021 with a bull flag going into the fall. But of course, this time it's happening a couple months sooner. Haha, who would have thought, that it's happening a couple months sooner compared to the previous cycle. But anyways, you can see we have this final bull flag pattern forming here where you're going to see that last blow off top, same like in 2021. And if we zoom back here, guys, you'll see the same thing also like in the fall of 2017. So basically in 2017, it was in the fall when we saw that final bull flag. And again, this is for the total crypto market cap, so all cryptos combined. Fall 2021, that's when we saw the final bull flag before the blow off top. Summer of, I guess late summer, early fall of, that was of 2017. Fall of 2017, bull flag before blow off top. Summer of 2021, bull flag before blow off top. And in this case, you can make the argument that we're kind of starting this bull flag here in the spring, with the summer potentially having a blow off top here later, well, basically in the next couple of months. And of course, this ties into the psychological aspect. I'm sure if you follow like a lot of these crypto influencers or whatever on X or Twitter, or whatever you want to call it, a lot of them have been calling for the top to be in late 2025 or early 2026. This seems to be the consensus view, which in my view is absolutely perfect. I actually hope that this video doesn't get too many views for the simple fact that if most people are expecting the market to top in later this year or early next year, then that's going to drive that much more FOMO over the summer, where everyone's going to be piling in, kind of similarly to how they did in early 2024. Everyone's going to be piling in thinking, oh my God, like I'm going to go all in, put everything I have, take loans, whatever. I'm going to buy as much as I possibly can because the cycle top is coming later this year and early next year. And this time I'm not going to mess it up. But of course, that act of buying in so aggressively over the summer is actually going to cause a cycle top, if that makes any sense. And it's going to kind of pull forward the cycle top the same way that we've seen. Again, you could make the case that the cycle top has been pulled forward by a couple of months in each cycle. Here, the cycle top was in November 2021, and here it was in January 2018, which is very clear to see when you zoom out to the total crypto market cap on the monthly. And of course, the thing that I'll just, because I'm on this chart, I'll just point this out because I think it's very interesting. What I personally think is going to happen is we're going to see something like this, where you could make the case that we have a massive kind of double bottom pattern that's been forming over the last decade. And I actually do think that we're going to see an enormous break. Like once we see a break above this resistance trend line, then the total crypto market cap for it to go to 7 trillion or 10 trillion, I think is a no-brainer in my view. So again, it's going to be a very, very, very big final blow off top because again, and everyone's going to be piling in thinking the highs are still coming, and then, they'll probably mark the top. But of course, this is just the crypto side. This is just the crypto cycle, crypto psychology side of it. We also have to look at the liquidity side of it. And of course, the kind of top liquidity analyst is Michael Howell. His liquidity analysis kind of informed my own analysis about the crypto market. He's been saying since, I think, well, basically since early last year, that global liquidity is likely to peak sometime in Q3 of 2025. Why is that? It's basically because the liquidity cycle is driven by debt refinancing. So basically every few years, let's say every 4 or 5 years, companies basically need to start paying down their debts. And this typically results in a contraction of economic activity and basically drains liquidity, because instead of using that money for something else, they're using that money to pay down debt, which basically destroys the money supply and kind of causes you could say like a short-term kind of deflation. Kind of a little bit hard to wrap your head around, but the point is that every 4 to 5 years, there's basically a debt refinancing cycle, and these companies basically start having to pay down a lot more debts. And of course, this time we have interest rates a lot higher than in previous cycles, so that liquidity contraction could be quite brutal. And again, because this liquidity drain, this refinancing cycle is starting in 2026, 2027, then of course you're going to see a little bit of that effect being pulled forward with the liquidity drain starting again like later this year, probably potentially at the earliest. Who knows? Maybe it'll come a little bit later. But Michael has been pretty consistent now that he thinks that global liquidity is going to start falling towards the end of this year, precisely because of this debt refinancing cycle. And of course, as you might have guessed, the fact that the debt refinancing cycle also follows a 4-year cycle, that kind of creates this 4-year liquidity cycle, which happens to match up really perfectly to the 4-year crypto market cycle. So, the more you know. Anyways, another factor to watch when it comes to liquidity, and it's really interesting because, of course, recently, and again, I'm not that surprised. That's I would say a couple weeks ago, or maybe like a month or two ago, Michael was saying, oh, like we're seeing some headwinds here to like global liquidity. And I'm not that surprised, because if you look at the DXY, the US dollar index, it had actually been rising in April and May a little bit. And why is this important? Because basically the US dollar index is kind of like is one of many forward leading indicators of liquidity. The weaker the US dollar is, the more money there kind of is to go around, because if the US dollar is weaker, then that makes it easier for these companies to pay down their debts, basically, if that makes any sense. So when the US dollar is weak, then you basically have more liquidity overall globally, because it's easier for these corporations and governments and whatever to get US dollars that they need to pay down their debts, and that leaves them with more spare money to spend on other things like buying assets and investing in real estate or whatever, right? So again, the fact that we're going to see the DXY potentially roll over here in the next couple of weeks, that's going to be incredibly bullish for liquidity over the summer. And again, that is consistent with Michael's own analysis, which is of course a lot more comprehensive, looking at like central bank stuff and what commercial banks are doing. Strongly recommend checking out this recent interview he did here with WTF Finance. Very awesome channel, by the way. Shout out to that guy. I can't remember his name off the top of my head, but great channel and a great interview here. And again, you don't even necessarily need to watch that interview. You can just watch the DXY, and that's going to tell you with more or less relative certainty as to what's going to happen with the liquidity conditions in the next couple of months. And again, we're starting to see the DXY roll over. It's probably going to roll over even more over the summer, and that sets the stage again for a pretty sizable increase in liquidity, which of course will take crypto much higher. And of course, I expect, as we've seen here in past kind of like dollar cycles, that after a month or two, like basically after a month or two, essentially, we'll start to see the DXY recovering again. So by the end of the year, we'll probably see the DXY starting to rise. And of course, it's going to be a drain on liquidity, especially as this debt refinancing wall starts to come in 2026. Companies are going to need to buy dollars to basically pay down their debts. And this is actually an interesting fact. One thing that a lot of people forget, they say that the US dollar is going to collapse. And I should have mentioned this at the beginning of the video, something to stick around to listen to. But if you made it this far, then you do deserve to know this, because it is pretty fascinating. I'm sure that you guys have all heard that the US dollar is over. It's over. US dollar is going to collapse. It's going down to the DXY is going down to 80 or whatever. I don't think that's the case. I actually think that the DXY is going to fall, and then it's going to bounce, and it's just going to melt up. Why is that? Because if you think about it, the asset that has the most demand on the planet is technically the US dollar, because there's so many US dollar debts that's almost like, you have to think of it this way. All the debts in US dollars are basically US dollar demand, okay? And this is really hard to kind of like wrap your head around, I know, for many people. But the fact that there's, tens of trillions, maybe even like hundreds of trillions or quadrillions or whatever of dollar-denominated debts like lurking around the financial system globally, what that basically means is that when you do run into this kind of like refinancing wall in 2026, 2027, if interest rates are much higher than what they are now, then you're basically going to have a global scramble for US dollars. The caveat is that historically, the Federal Reserve would kind of provide countries with whatever dollars they need to service their domestic debts, like using swap lines. But what's interesting is that if you look historically, the Federal Reserve was hesitant to do these kind of like currency swaps with governments that it wasn't a fan of. And of course, some of you guys might have heard that, of course, the Fed Chairman Jerome Powell, he's going to be out next May. So what I think is possible, if not likely, that you're going to have someone come in sometime next spring, basically, into the Fed, and they are going to basically be more selective, more restrictive with these dollar swap lines. And I think that the result could be that you get a huge kind of like a demand crunch for dollars globally, and you basically see the US dollar becoming even more weaponized than it has been in recent years. And as you guys can see, it's like I would make the case like, yes, of course, all this rally here was due to interest rates, but beneath all of this, and sorry I'm rambling on it, but it is really fascinating. Beneath all of this here, when the Fed was raising rates, the IMF was signing deals with countries all around the world because countries were like shit, like, or I mean, sorry for cursing, but I mean, yeah, like they were like shit. They need lots of US dollars, and they are not able to get them. And the IMF was basically making these deals saying, hey, we'll give you US dollars if you promise to align with the US on certain issues and whatever. And you actually see headlines of like this Kristina Georgieva or whatever her name is, this IMF head, that she made a record amount of deals with countries during this period because they were getting crushed by this rising US dollar. And I think we're going to see the exact same thing happen again on a much bigger scale. But again, this is more of a story for 2026 or 2027 when countries and governments and everyone has to start refinancing their debts, when they start needing those US dollars. You know, do you think that how likely do you think it is that the Trump administration would say, oh, you need US dollars from these Federal Reserve swap lines? Well, I'm not so sure. You know, you're going to have to give me XYZ concession. And maybe the other country says, well, I'm not willing to do that. Well, it's like, well, okay, well, then good luck finding US dollars elsewhere then, right? And then that'll result in a scramble for US dollars, and you see a massive rally, a melt up again, 2026, 2027. And that's going to crush basically everything, whether it's crypto, stocks, and whatever. But anyways, in the short term, of course, again, the DXY looks like it's going to roll over, bullish for liquidity based on previous cycles. It looks like, you know, where, again, and sorry for like butchering that explanation earlier, but where we are now looks very similar to the summer of 2021 or to the fall of 2017, where there was, again, like a 2 to 3 month or 4 month massive melt up that followed. I think we're about to see that breakout happen here, and that's scheduled to happen over the summer. And I think it could be over, you know, as soon as September. I think by the end of September, most of the gains will be in for the crypto market. That's just, of course, that's just my opinion. If you disagree, then feel free to let me know in the comments as to why. If there's anything here that you think was objectively false, I would love to know, because as far as I know, everything here is pretty rock solid. And again, this is the thesis that I've had now for over a year. So far, so good. Anyways, guys, if you did find that information helpful, then be sure to smash that like button, subscribe to the channel, ping the notification bell, and I'll see you in the next one.